Alrighty, everybody. How's it going this morning? How's it going? Looks like we have David, we got Dan, we got Al, we got Jason, we got Donald, Will, Spinborn, channel members, Don, Diane, Sergio, Steven, Amy, Arturo, Rex, Frank, Ivan, Terry, Kevin. How's it going, everybody? PPI numbers are out. The market just says, which is pretty typical, right? I mean, when the numbers come in order like they're supposed to, usually we get CPI with whatever surprise there's going to be, PPI with the market just says, yesterday the numbers were pretty accurate with CPI, so I don't really care what PPI comes in at. And then we get retail sales, which may be another So those retail sales numbers coming in tomorrow morning before the open. Retail sales for January. We'll see what that transcends into, I guess. How we develop those numbers. Are autos coming in strong still? Are they not coming in strong? And we'll get through this all this week, and then we'll move on to next week. And next week, we do have a holiday coming up on Monday, right there. Washington's birthday next week, so we get another wonderful 4-day week. So exciting. I love it. I will do a crypto special on Monday, but the regular market will not be open. So, see what we got. Nothing next week. Nothing. FOMC meeting minutes. And that sometimes that creates volatility. Most of the time, we're just like, whatever. We knew what they were gonna say. And Thursday, nothing. Looks like a boring week economic news wise next week. So jumping back to today, we got the PPI numbers. Basically in line. Basically right in line right there. Standard, normal, no surprises. Now tomorrow, this is where things might get a little dicey because, like I talked about yesterday, when we get a negative expectation, negative forecast on retail sales, many times, not all the time, but many times when we forecast a negative, we get a bigger negative than we forecast. It's just kind of when you look at the history of retail sales forecasts, usually when we're forecasting negative, we get a bigger negative. Now, that's not always the case. Sometimes we go positive, so that might happen. It's entirely possible. And the market rip higher. So it's a coin flip, It's like, what does the market really expect here out of this? And does it really matter? That's the... I joke about the market being like, whose line is it anyway? If you've never seen the show, it's like the points are all made up, and it's like the scores don't matter. The points are all made up. It's kind of like the way the stock market is. The economic news is all made up numbers, and they don't really matter at the bottom of the line. I mean, the mainstream media sows this narrative constantly that traders are making decisions based on blah, 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 blah. How many times do you make a decision based on whatever that is? It's not, and let's be honest, like 80% of the trading is algorithms. So it's algorithms making those decisions. It's not traders doing jack squat diddly. I mean, that's really the way this all works. So it's just one of those things, once you wrap your head around the fact that the news doesn't matter, positive, negative, or otherwise. And I found a clip from Jim Cramer back in I don't know if it was the 90s or the early 2000s, where he was talking about when he ran a hedge fund, he would call up the Wall Street Journal, the New York Times, tip them off to a news story. Hey, blah, blah, blah is going to, blah, blah, blah. Whether it was true or not, he would tip them off. And he said they would run with it and write all this crap and then put it out, and then the market would react. And he would do that all just to get the price to move to where he wanted it. And you don't think that's still going on today? I guarantee you. I guarantee you. So all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to buy or sell any financial instrument. If you desire that personal financial advice, you need to hire and consult a financial advisor. What all that means, I make predictions right here every day for you. And sometimes they come true. Sometimes they don't. I may never get another prediction right again. And then what can I suck? Because that's what I do, right? And so also substantial risk of loss. So don't trade stocks, options, bonds, forex, futures, cryptos, treasuries. Don't long them, don't short them, don't trade them. If you need somebody to tell you what to do, you're going to have to hire and consult a financial advisor. This website came out, I don't know if it was this morning or last night. This is the Doge website right here. This is what they're... Check it out. You can dig through all these cool numbers now. They're putting out... They're going to start putting it out. How much, what they find, how much regulations, what they cost, where the inefficiencies are, what they find, when they get some savings, when they cut out waste. All of this at doge.gov. So I thought this was pretty cool. Pretty cool. You can let me know in the chat if you like this, or, this is definitely accountability we haven't ever had as citizens of the government here. Well, look at that. The average person makes $98,000 that works for the government. Average employee is 47 years old. And this is just the executive branch. They don't have the other branches yet. Still missing the judicial, and still missing the, whoops, click that back off. Still missing the legislative employees there. So that's just the executive branch data right there so far. Yeah. It's only salary, it's true. So, just like anything else, salary, but look at that. We spend $200 billion on just running the executive branch of the United States for 2.2 million employees. I say we, I'm in the United States, so the royal we. Anyway, back to what matters. That doesn't really matter for the market, although, we got to fix that debt bubble. This right here, look, just more indecision, just more, what did I say? We may do that, may keep doing that until it all comes together. It's not really what I want to see, but... And I would really, really, really like to break out of this and not continue this all the way out into the end of this. NASDAQ's the most clear as far as what we're doing. If we can break out. Come on, baby. Break out of there. Do it. Probably coming right up here. If not, this is a real possibility, like what we do here, if we don't break out. If we reject again, I want to see this break out. I don't know about y'all. I want to see it break out. I'm sick of this consolidation. We've been, really, it's been a tough market to trade because ever since July back here, when we came up and made this July high, we quit trending in the market. Now, if you zoom out or zoom in tight, we pulled back in August and then we did a rip up to new high, and then we've just been sitting since December. But when you zoom out and look at it, any kind of long-term position, we haven't really, last week we touched it. The July high. We haven't gone anywhere since July. We kind of stopped trending. So it makes it super tough to trade when the market just stops. We got 2 years of really good, strong move, and then now we've been taking a rest for August, September, October, November, December, January, February, March. 7 months, 8 months. Just been The market just said, Now, ES did climb. We did continue to climb a little bit, but now it's tired too. It's just taking a rest. It's chilling out over here. And ES is the S&P 500. In case you're new, you're unfamiliar with this. We're just chopping. Makes it incredibly difficult to do any kind of directional trade. And with the range that we've been doing this, makes it incredibly difficult for earnings. Like if you do kind of like an income type trade, trying to do earning type trades off of stuff like this, when you get these giant swings that are like 100 points, you get your crap stopped out, and then it rips right back up where it was, and then it comes right back down again. And I mean, it's nasty price action. So if you've been getting beat up lately, it's okay. Like, I mean, it's not okay. Nobody likes to take some losses, but this is a tough environment to trade in right now. The price action is not clear. It's tough. We're in a downtrend as long as we're making lower highs. I'm not trying to do like confirmation bias, like, oh man, I've been sucking, and well, at least there's a good reason I'm sucking. That's not the point here. It's, I've not been making very many trades at all for several weeks now. I've kind of scaled way back on what I'm doing and just kind of sitting waiting for this to confirm that we're done doing more of this chop. There's a very real possibility we continue down this trend. You've got to adjust to market conditions. If you don't do that, you get chopped up, and then it takes you months to recover once you get chopped up. So if you keep trading aggressively into one of these choppy sideways things, your account gets chopped up right with the choppy sideways thing. Anybody identify with that? You can let me know. Some feedback. I appreciate it. But I mean, not really been doing anything. Yeah, there was some good, we had some awesome trades in there, but this has been rough right here. We just kind of stopped going higher. Choppy. And I don't really see anything coming down the pipe, news-wise, economic news-wise, to provide any clarity. Now, the big thing that we do have with all the earnings, the majority of S&P 500 earnings now kind of in the clear for the next couple of weeks, we'll have about $50 billion flow into the market. That could lead to a breakout and push it up here. But then what? Once that $50 billion of stock buyback money kind of runs its course over the next couple of weeks, then what? And if you're unfamiliar with what I'm talking about, let me roll back up a few days and pull that back up. Stock buyback chart. I gotta find it. Man, where did I? There it is. It's been more than a few days since I talked about that. Content not available. That's cool. Love that. Well, let me pull it up for some reason. That's weird. I'll just pull it over on Discord. Looks like this right here. We're going to get this $50 billion. It'll last for a short period of time. Then we'll start dropping it off, and we'll drop off into the, that's what it kept doing for me. So that content, having trouble apparently. Cool. God, I love it. Pop it back up again. So, stock buybacks, short term. This one's very extreme compared to what we've had. At least it's projected to be very extreme. And we'll get some dips and rips along the way. And when you look at seasonality, we typically pull back from now into, this Discord having trouble with the charts for some reason. Look at the seasonality right here. what I just did with that chart. There it is. Typically, we get a pullback from mid-February into the beginning of March on the NASDAQ. We're kind of sitting up here. We're not at all-time highs, but we're at a high, trying to break out. But we may experience a pullback just based on the seasonality of, and this takes in consideration the way earnings hit, the way, Christmas plays into the earnings announcements and all that sort of stuff. Like the specifics of this year, new president, new whatever, new things happening. There's uncertainty. Usually the market starts out a little choppy on the NASDAQ. Well, guess what? This year's not really any different. Not really been doing jack squat here. The rest of the year, usually we rip from mid-March to the end of the year about 16, 17% on the NASDAQ. So we could have an up, we could have a big up, and we could have a big down. And this is not, seasonality is just the average across 20 years. This is 20 years average through the, 2024. And the way averages go, some years are above average, some years are below average, and some years suck, so. But if we just have an average time, we might get a little chop into mid-March, and then, so just one of those pros and cons things, right? Like, keep in mind that we might do that before we can do that. Might come down here and retest one more time. Not my favorite thing to sit here and think about, but if you ignore history, you're doomed to fall susceptible to the patterns of the past. So, patience and discipline is the hardest part of trading. Patience to wait for the setup and discipline to take action when it actually shows up. And, having an ability to recognize when conditions are effed up, that's takes a special talent. That's why you come here and watch me, right? I mean, I've kind of warned about this potential nastiness for a while. I've been expecting us to hit the roadmap line, but we just can't do it. We're holding that July high pretty tightly on NASDAQ. Yes, took a nice big fat dip here and broke out of the downtrend and retested, and entered into some funkiness. So we'd really like to break out of this funk. Really, really, but the funk will continue. Basically, the market is at rest at this point. We're chopping around here, but the market is at rest. Until something kind of knocks it off being at rest, we're going to keep being at rest. At rest may be a giant several 100-point range, but we're just at rest. It's kind of my theory of the way the market works. Russell, one of the bright spots here, holding the roadmap line, turning green today so far. There's resistance. This may be that final rally I kept talking about. Maybe, possibly, this is telling us that we got this final little consolidation here, and we're going to rally up into the zone. If Russell does that, can the S&P and the NASDAQ go on up and make new highs? If we do that, though, that's going to kick off a bigger correction that's going to last. If we go higher in S&P 500 and we go higher in the NASDAQ, we make those all-time highs, and we rally up and stop in the Russell. It's kind of perfect storm for a bigger, choppier correction. So what I'm saying, I guess, is that we might be setting up for a larger hot mess of correction. This might pop up in here, hit that target. Let's clear a few things off just to make sure we don't get confused. We might hit that upside target there, 62.50, and then experience a bigger, possibly 3-day roadmap hit right there. We haven't done that since back here in November of 23. maybe a bigger correction, maybe out, a few months. Won't be just one big straight down. It'll be, it'll have humps and bumps. Then possibly we go up again, make that even higher high, possibly up to like 6,600. Maybe out in late summer, early fall, mid fall. I don't know. Possibly even through the end of the year. And then we got to watch out because I think we're going below 4,000 before we go above 7,000. I don't know if that happens this year or it pushes into next year. This is kind of a big picture outlook. Increased volatility, bigger swings, especially to the downside. And this one could take us possibly down to the monthly. It's been a while since we've been down there. Could be something like that. It may not go that fast. I mean, look, when we get these corrections back here. So look how long it's been since we hit the monthly. Back here in 2011. This is cooking in the chart. We got a bigger correction we're going to have to do. Those that don't think we'll do it are doomed to repeat it. I mean, look, this one was just a little baby. Right back here. So I think that's what we got cooking in the next few months. And we, one of the things we could do is an intermediate bounce off the daily and then crush through it. So oil, I guess we flip back to the charts where I have everything drawn. Oil rejected off the roadmap line pretty, look at that. 2 days back to the bottom. And we actually did an extension. Look at that. That was a roadmap bounce right there. Almost the extension to that 1448. So crazy. What was the low today so far? Low was 70.22 so far. That's pretty darn close. It's within 24 cents of hitting the 1448. Might get a little, if we hit that 1448 today, that'd be interesting. Resets everything with the lower low. I mean, it did make a lower low, so it resets we're going to have to go retest the roadmap line again to get any kind of upside. It's so crazy it took that all back. I mean, 3 days up and 2 days down. That's volatility. GC, still grinding in here. Had a little bit of pop overnight. Really cautious here. We did push up through that level, but we rejected just above it. So let's clean it up and look at what we've actually got with the more data. This high, this low. We stopped at the 786. If we get below this roadmap line, watch out for that level and that level. If we can break through those two highs right there, extension to the upside. I'm going to set an alert right here, edit. I can't spell. Cool. All right. Bitcoin. My gosh. That's drifting lower with more chop inside the range from back here on the second into the third. More indecision. This is the most risk on, risk off asset out there. When the market is risk off, Bitcoin suffers. when the market is risk on, this thing outperforms. Right now, trader is not very confident. You know, this, if you want to be able to read something in the market right here, tell what's going on. This is traders are risk off, but they're not big risk off. Like when we're big risk off, we do stuff like this. Like this was a risk off. And then, well, maybe we overreacted and just kind of catch up. You see, go back and look at August back here. Let's go back and look at August. This was, oh my gosh, get out. Right? I mean, look at that. That went from 70,000 to 50,000. That was 20,000 points. And we were chopping into that, so you knew something was up. Markets, traders, the market, traders, market and traders weren't very convinced. Weren't very convinced. Like we kind of stalled it out back here, and everybody's kind of not feeling super strong. And then we got that big flush right there in August. Pretty violent, pretty fast. That's risk off. Get out and figure it out later. Then things turned kind of optimistic and Bitcoin went ripping. Now we're back to not sure. Not sure. We've been not sure since we got up here kind of in November. Just chopping around. We haven't had like a really big, we haven't had a really big correction. We've had some 10,000 point days, but we haven't had a really big correction. And we ramped it up to 100,010. We've been down to 91. That is a 20,000 point range, but it's not had a big flush out. Not really big. So be careful. We may have another big, fast flush out before this gets going. I would love to see it just break out and go, but that's not what we're getting so far, which tells me to be careful. We may experience a flush. We've left downside targets unhit. We may get that bigger flush. Just a high level looking at the market here. So Ethereum not really doing squat after it hit that downside target. Just consolidating, not doing jack squat. This has been ramping up a little bit. We'll probably, just based on what we've done since that big August flush, we'll probably ramp back up to the upper end of this range. We'll test it again. Push it back up here. One more time. We've done it once, twice, 3, 4, 5, 6. This will be like the 7th time. Then we may pull back again. If we break out, we've got the upside target up here. If we break down below this range, we'll probably flush it on down. And we are starting to poke below the roadmap line more and more. Roadmap line going more flat, not really meaning as much when it's flat. It doesn't act as a strong support and resistance when it's flat. And this could drift all the way down here and make a lower low, and that would take the market down even bigger. Now, this may not happen. Now, what might happen is this might drift higher, back up to the top of the range, and then we get that bigger pullback, and then we get a bigger run, and then we go down. But to see how this all plays out. Dollar, I've mentioned a few days now that we're set up for taking a trip down to the roadmap line here. We're set up for that. Take a few of these past targets off here. We do have this little bit of support right here below us. And then we have the roadmap line right there. That is primarily where I expect us to go next. Primarily. Right in there. For the dollar. All right, I go pull all the gainers. That's things moving $2 or more up in the pre-market. Put it on the gainers list. I'm going to grab what's moving $2 or more down. Put it on the decliners list. We go hunt through that list for opportunities for the day. I don't update it. You know, there's no live update to it. I pull that in the pre-markets, and then we go just look through it and find opportunities if there are any. Sometimes there are, sometimes there aren't. Like that one already moved, went kind of crazy, absolute crazy. Wow. And next upside resistance right around 550 on that one. Giant pop on earnings. Let's see what we got here. 30 price to sales. I found something I want to show you. I brought this to show off. Right here it is. Look at this right here. When I talk about price to sales, you know, you can't fake sales. If you're new, haven't heard me say that before. You can fake earnings, but you can't fake sales. All right. Price to sales for S&P 500. I mean, there's the median right there. Look at these. Price to sales for the S&P 500. That's all in. Price to sales. There's the median, though. The median down here at a price to sales of 3. So 3 years for all your sales to cover the price of your stock on the median S&P 500 company. That's like company number 250. Look at the top, though, up here at pushing 9. See what would happen. You remember this? You remember what happened back here? .com bust. We're getting back to that .com bust level. Look over here, COVID. Ooh, baby. We took that down and brought it right back. Took it down back to normal levels and then right back up. So think about it. So this is the S&P. This is like the broad brush. This is the economy, right? The biggest companies, 500 of them, average price to sales 8. We usually typically spend a lot more time down here around 2 to 3. It's just kind of typical. The median hanging out right here. And the median hasn't recovered since COVID. You wonder, you know, why do people feel like, you know, everything's not doing as well? Price to sales wise, prices haven't recovered since COVID. This could be the first move down, the retrace, and we could get a bigger down. Just think about it. Those price charts work the same on pretty much everything. So when I go look at stuff, you know, I commonly say price to sales over 20 is getting a little crazy. Well, there's a reason. Look, I mean, the average company, the median, you know, the average company in the S&P 500, 8. The median, 3. And then we look at something that's got 30. Or we look at, you know, something else that's got 100. Are you kidding me right now? I mean, absolutely insane numbers. There's going to be a pullback. There's going to be a reckoning. I mean, look at this one. 30. It's kind of held at 20 for a long time. Now we're up to 30. Other big companies. 6. That's probably more appropriately priced. Apple. Hanging out at 9. So it's right at the average for the S&P 500. That's not horrible, right? Microsoft. 11. Probably a little steep here on their price to sales. And their stock price has been pulling back a little bit. Meta. 11. Yeah, they've been hitting pretty good. Netflix. 11. I like to look at the price of sales. You know, they can mess with different costs and stuff like that and tweak the earnings. You can fake the earnings numbers. Can't really screw with the sales numbers. You either made sales or you didn't make sales. Tesla, this one's 11. Might be a little pricey here. And several of these are above the average on the S&P. So we'll see. I mean, it's one of those like, what does this tell you? I don't know. Things could be a little frothy, right? Could be a little frothy. Dun, 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 dun. I've never, like, I think altcoins are probably done. There's probably no altcoin season. I've never said there was an altcoin season. So app might be getting up there a little crazy. HubSpot, nice pop today. Popping on earnings. How much higher can it go? Look at the last pullback. Might be hitting the top. 1,000 could be the next target up there. NVMI. Oh, several of these that are rocking and rolling here today. Next target up around 300 on NVMI. MCO. This pullback right there. Next target at 535. CYBR. Next target at 435. Bros. Wow. Out to clear air. That one could be cruising on to 100 right there. Next target up. May experience a retest of that topping zone there. And then push it on up on Dutch Bros. Crocs. Oh, nice. This could be done. That hit the almost dead center of the target there. Wrongemer, your favorite right there. Watch for the resistance at the roadmap line. If we can break out, this could rally pretty strongly. Tesla. That might have been it yesterday. Like that pre-market hit on the roadmap line. Even though here on the daily chart, it looks like it missed. If you jump down, check it out right here. We tagged that line right there. We tagged it in the pre-market. So you go back and look at the daily charts. We tagged it. That was in the roadmap line. That was the daily roadmap line right there. This might be done. This might be... That might be the super aggressive buy. Might be now. Move some of the stuff out of here. We hit the target zone. Go for that high right there, that low right there. I'm just going to go with the daily low. So the resistance coming up is at that 618. It just happens to be right where those highs are. That is the resistance. If we get above that, there's the target right there. Get aggressive buy now. Stop down here around 300 if you're going to do that. I've had a 500 target on this for years, so I still think it's one of those, gotta have conviction to do the thing. You know, I've bought in these dips back here, and I'm just sitting waiting for this to hit the target. Could push it all the way up to 600. Is it high on price to sales? Yeah, it kind of is. Might they ramp up sales all of a sudden crazy? They might. Coin did a 618 and held. That was the first move up. Well, drew that sloppy. First move up, retraced the 618, held right there. This might be about to rip up into this zone. Way to play without buying options or something like that would be Connell right here. 2x leverage on coin. So coin can move without, it's possible coin moves without Bitcoin actually moving big. Starts moving and then Bitcoin catches up. It's all possible. Spotify, did they report earnings today? No, yeah, today after the close. Spotify, that's got resistance up at there. This is a big target zone doing multiple confluence things. There may be resistance all the way up into the 750, possibly even 800 area, and then we may get a pullback. So I would be cautious on chasing Spotify higher from here. Could keep ripping. If it does the absolute crazy exponential thing and then does this, watch out for that right there. Eventually, what comes after Spotify? I don't know. But think about it this way. Think about the history of recorded media, right? How do people listen to media? We've had, all the things, 8-tracks, records, cassette tapes, CDs. Now we got, then you could buy MP3s. Now you can stream it. So what's next? How does the record companies, where do they take it from here to make more money? So is Spotify the end game, or is Spotify, is Spotify just the next game before we move on to the next technology for audio, music? I don't know. Just saying. I may not have a long game. Hood. Oh man, it's up in the 6. I'm gonna have to go sell my. I think that's it. This could go on up to 80, but I'm out. I think I'm gonna get out. 60 was where I was looking to get out. I think I'm gonna go close out the hood. I've got. Move on. That was pretty good. It's been a pretty good ride up off the lows. I think that was done for now. May experience a larger retrace before we go higher again. It could keep going, but I think I'm done for now. Robinhood, there's a 2x leverage right there if you wanted to play it. This may experience a pullback if Robinhood pulls back. SN, Shark Ninja. Dude, these guys just released. So, I don't know. I bought a Creamy back in the, it's probably late fall, late fall. No, I guess it's early fall. I bought a Creamy. If you don't know what a Creamy is, you can make homemade ice cream, and for years I've tried to make homemade ice cream in one of those ones that spins the bowl or does whatever, comes out for crap, right? I bought a Creamy, and you just dump your ingredients in a bowl, freeze it. There's no and then it has this blade that creams it into ice cream, and it's the closest thing to store-bought ice cream I've ever had in my life from a homemade thing. And you could do it with fruit. You make fruit things that have the consistency of ice cream. It blows my mind. They just had this commercial for, I don't know I can't remember the name of the thing, but it takes the Creamy bowl, flips it on its side, and squirts it out into soft serve. I was like, mind blown. It was the coolest thing. I just saw that this week, and Shark Ninja just keeps coming up with crazy stuff like that. I'm not saying you should buy a Creamy. My personal preference, I've always tried to make homemade ice cream that was just like something you would get at the store. This Creamy thing is the first time I've ever had anything like that. And the thing that worked the best, funny enough, was eggnog. When you could get eggnog in the grocery store pretty readily, we were taking it and freezing it in the bowls, and it was the best tasting eggnog ice cream I've ever had in my life. It came out perfect consistency, perfect flavor, everything. That's hitting targets, so watch for a retrace right there. I'm not invested in Shark Ninja. I just use some of their products. Not very much, actually. I think the Creamy is the only thing I have. Boil. Creeping up to the top of the roadmap line. Last time we poked up, we got a large retrace. So watch out for that to come through the top and possibly retrace. We go look at the natural gas chart. We're coming up into that resistance right there. Funny enough, kind of funny how this all works. If we reject off of that, next direction will be down, would be my expectation. GE Vernova, I still think this looks ripe for a further drop. Baidu has been lagging. I don't know if Baba is on the list. It is not. Baba's been ripping. Baidu has been lagging pretty severely. That was the lowest low too. It's one of those stories of haves and have-nots. And then you have PDD, Pinduoduo, CWB. That one's still lagging. Has not caught up. China Internet still lagging. Has not caught up. Interesting. So Baidu can't really run high to low because that's a lower low, so resets the chart. Nothing over here really counts, but you could high to low it from back here down to here, but that just doesn't seem like it matters that much. So we need a retrace in this current move. Kind of did a roadmap bounce there, which doesn't project us very high, and we probably already hit the targets. We did. So probably needs another retrace in here before we go higher again. That's going to have to work through some stuff to go higher on Baidu. Even though it's kind of lagging, there's just not a giant upside opportunity. SOC, stable offshore corp, hitting targets. Let's see, that pull back over here. Could push us a little higher into the 30, possibly 31 or 34 area. Just not my... This has been really choppy compared to GE Vernova or the GE stock itself. GE Healthcare just kind of choppy. Very corrective, overlapping. When I talk about overlapping, you look at this high, you skip a low and a high, and you look at this one. If it was trending, these don't overlap. If you have it like this, where you get a high, a low, a high, a low, and a high, and you look at this, and you don't get overlap, that's trending. But when you overlap them like this did right here, that's choppy sideways. So really you want to see, when I'm looking for trends, I'm looking for a move up, a retrace, a move up, a retrace that doesn't even get close. That's a trend. When we do a move up and a retrace and a move up and a retrace and we get this big overlap, that's just sideways action. Tap. Downtrend to highs, just not. Bud's not been very. Yeah, Bud went down and made a lower low. Golly. Glad I bailed out of that one. And that like 20th attempt to break out, it failed. I gave up. Had a good opportunity, just never did it. Can't bet them all on one. MGM. Yeah, getting through the roadmap line. It tagged the downside targets. Let's clean this up and take a look. What do we got? What do we got? This could be a measure bounce. Opportunity. Not giant opportunity. Not the kind of numbers I want to see, but might go from 38 to about 59. Cisco. Talk about one that hadn't done anything. This thing's been chopping for a long time. This was the darling that was everything was gonna run on Cisco, and it busted. We've never been higher. Like if you bought this at the peak back here for 25, almost 30 years ago, you're just now getting back to scratch. Wow. Be careful. I mean, there was plenty of opportunities in here, but look at these pullbacks. You can do another one of those pretty easy. Be careful. CLS coming up. I mean, do you see that? We had this pop pulled out. This did a giant up and a giant down before. Now we're doing a gianter up. Is it going to do a gianter down? I would be careful. Stocks tend to repeat the same things. Reasonable. Yeah, way behind on price to sales. Look at that. A giant opportunity to go up on just financial standpoint. Still, that could go up like 8x. Now, price-wise, we've hit targets, and a retrace would be in order. Something further down here before we go up again. See what we get to. DEO. Oh, yeah. This one could come on down here to 100, but might be about to be done correcting. Might be. Got a long way to go to start climbing out of here, but I wouldn't bet on it being done yet. AIFF. Oh, that's a piece of garbage. Reverse splits, dumpster fire. Don't even mess with this. TEM. Potential going up. 85.91, something like that. Connell. Like I said, if you think coin's done, opportunity to go to 80 from here. Not bad. Gorilla Group. This is software, right? Video intelligence, Internet of Things. Yeah. That's it's got a reverse split hanging out back here. It makes me question. Upside targets right there, 28 and 30. Yang keeps pushing lower as a few internet bulls pulling it up today a little bit, but this just keeps grinding into the abyss. CMT, Camtech, sitting on the roadmap line, nothing particularly sparky catching my attention there. BNTX. We might see an intermediate pop to this 150 area before it declines more. That's biotech, be careful. LEU, upside 125, PGY. That's a downtrend. Be careful if you were chasing that. There is a reverse split in there. Not a good one. Win. Looking for a win to pop on down. MPC. Potential for that to rock and roll on down lower. VST. Potential for that to rock and roll on down lower. Decliners, WST. Well, I guess that one got hit. First move down off the highs, retrace. Next move down will put us around 140. TTD. Whew. Ouch. Dang. Oh, man. Ooh. That got hit. You got wrecked. Missed on revenue, beat on earnings. Price to sales 26. Yeah, they needed to come back a little bit, probably. Price to earnings have been falling. So they've been eroding their earnings, even though price to sales was climbing. To me, that's a red flag right there. Fundamental trader wise, like I don't trade fundamentals, but that is a red flag right there when you have your price to sales. So the price of your company is growing relative to your sales, yet the price of your company relative to your earnings is going down. Something's up. Something's up. Something's up. So they made money, but well, how far does that one go down? That point there, that point there. We're at a reversal point if it can hold it. So this could be a buying opportunity. Could dip a little further to 75-ish, maybe even 70-ish. It's in the vicinity of where I would want to see it. If form support here, if we start breaking higher back above this, 90 area, we do have the roadmap line that's going to be coming down viciously. It's going to be arcing off probably, unless we just pop right back up there. Could be a buying opportunity here on Trade Desk. Boy, that got hit. Wow. DE, just kind of shocked that was one of the ones that was supposed to be listed into the NASDAQ right there. It got hit. And DE has tagged the upside. Could go a little higher, possibly even up to 500, but we're chopping here. This has been very choppy for a while. Not indicative of a strong economy, just economic-wise. When things are good, farmers and construction people buy equipment. Business usually gets good for deer and for cat. It's kind of the two I watch for this. When this has all been choppy and we just make a nominal higher high, it makes you wonder, right? Now, cat, different picture. This one's actually been performing a little bit here to the upside. But we've also entered a period of chop where we haven't been trending nearly as strongly anymore. Remember I was talking about the, look at the highs and the lows, that high, this low, overlapping, kind of stop being trending on cat and DE, even though we spiked up and hit that high. We're working on a pullback. Not a very strong trend in either of those. So economic-wise, the world might be entering a worldwide global recession, and that may spill over in the United States. And this could, could be forecasting the bigger potential correction. Reddit, watch for the retrace. CTS, breaking below. If this sticks here, this may flush much bigger. It is pharmaceutical biotech stuff. Be careful. DDOG sitting at the roadmap line. Finally hit it. Been talking about that. Going to hit for a number of days. If we can hold there, be really positive here. If we could hold, if you're maybe a credit spread type person, maybe something in that 130, 120 area. If you think it's going to turn here, breaking back above That level up there would be really strong. Price to sales sitting right at 20, so it's just right on the edge of the danger zone. It can sit there. No big deal. Might be back testing. See, we see this a lot. Like, see how we've got this resistance, downtrend highs. We broke through, got really excited, came back to it. Test it if we turn back higher, going on up. If we break down below it, probably coming on down. That's really a key level, and that's right in that place where I told you. You get that 130, 120 area. If you want to do some sort of credit spread type thing, and maybe you want to be down at 125, 120, 130, 15, somewhere in there, betting on this thing holding to turn higher. FUTU, pushing on through. This looks like we're going to get some expansion on up to 140. UL, it turned itself around. It was pretty down in the pre-market. Now it's up. UL bounced off the roadmap line. Not good. No bueno. Oh bueno. That low, that high. Expansion of the trend. Continuation of the trend would put us down to this area right in here, somewhere around 53, 54 as the primary target. BTI, tobacco, probably coming back down. That hit the extension target. Coming back down to the roadmap line. NTES, potential to backtest that breakout out of the highs, same as DDOG. This did not rock and roll to way big higher highs, but it did pop up, coming back. If we hold, going higher. If we fold, going back down. PTIR, just for the love of everything holy, be careful trading that one. Leverage on PLTR, that's 100 price to sales. That's one that I can't bet against it because it can go to 200 on the price to sales. And then you're sitting there like, well, I just lost all my money. So don't bet against them. But once it starts giving it up, it's going to be a vicious bail. Aspirin aerogels, well, that was the bubble pattern right back to the bottom. Might go lower low, possible. Might go for another one, might just go sideways. I can't really tell much on that one. TSDD, 2x short on Tesla. That's getting wrecked. TSM might come back to the roadmap line. Roku, chopping. Boy, that's choppy. If it can break through this zone right here, it did this gap down back when, I don't remember what it was, like Walmart announced they're going to get in the TV game or whatever. We're back up to that gap down zone. If we can get through it, we can go up again. FSLY, Fastly. That got wrecked. First move down, retrace. We're at a point that can reverse here. It's certainly not a great looking chart. That low, that high. And we're at a point where if you were going to gamble on low price stuff, that point should hold. So you could stop out at 7 if you're going to buy now. And has the potential for a nice big fat upside here. Maybe we could be talking about a double or possibly a triple on Fastly. Just on shares. TSLQ. Yeah, I spoke about gold and oil like way long ago. That was right at the beginning. We usually hit the futures and then we roll through the list of opportunities. And TLSL, another 2x short of Tesla, and it's also getting wrecked. Cold. Wow. Ultra short on natural gas is getting wrecked. That's why playing short natural gas is so difficult, because you go look at the natural gas charts, that's a lower high, but you go look at the cold chart and it's a lower low. Ouch. PDD. Sitting at the roadmap line resistance. MGNI. Probably going to come back to the roadmap line. And the last but not least, NVO has more support right here. If we get below that, probably coming on down to that 50, 60 area right there. What's Lily up to? Lily seems pretty unfazed. Like, neither one of these really got very phased by the blindness news. So hopefully that's hopefully it's just FUD out there. And this looks set. If we can get through that gap, this looks set to rally on up to 1,000 for Lily. NVO still having a hard time finding its bottom here. So definitely a story of two different charts there. They used to be very parallel. Now this one's dropping off like a rock, and the other one's rocking and rolling. We do have earnings coming up here soon. The price to sales 8.8, where we've got Lily at 17. So Lily's got double. Yeah. Definitely some opportunity, and they look at that divergent. Like, well, at least they're still going the same direction, but yeah. And definitely overhyped a little bit. Let's sit right at the S&P 500 average, and Lily is kind of double the average, getting near 20. If they can ramp their sales, that's cool. But if sales start hiccuping at all, that's an opportunity for this to plummet back out. Now remember, this could be the bubble pattern and it doing this choppy thing too. If we start doing that, watch for the breakdown and the plummet. All right. That was the list. There weren't any great opportunities to talk about for bonus trades, so bias for the day. Cautiously optimistic that we can stick this breakout. We're trying. If we can stick this breakout, I might change my odds back to the 75% higher. It's definitely got me a little uneasy here last week, but if we can stick the breakout here today on NASDAQ, looks pretty good. We still have a little bit to go on. Yes, and if we do it on both, looks pretty ripe for going on up here to 6250 area. 6200, 6250, right up in there. Next week, maybe. All right, everybody. Thanks for coming. I'll be back again with you tomorrow. Same bat time, same bat channel. 9:15 tomorrow.